Stocks tend to move through a repeating rhythm: a quiet basing phase where interest slowly builds, an advancing phase when the trend takes hold, a topping phase where the move loses steam, and a declining phase. ArcAlpha reads that rhythm for you on 2 clocks. You'll see it as plain labels. The two trends are simple. Markup is an established advance. Markdown is an established decline. Everything else on this row is a pause, and the pauses are where the story usually turns. Near the lows, a quiet range is accumulation or basing while it's still undecided. A rest inside an uptrend is re-accumulation, the trend catching its breath before another leg. A stall inside a downtrend is redistribution, a pause that has tended to resolve lower. And when an advance flattens without a clear lean yet, you'll see consolidation. Same rhythm, different neighborhoods. In ArcWeb, every stock carries 2 of these reads. Phase W is the weekly cycle, the big structure. Phase D is the daily cycle, the shorter rhythm living inside it. The list is ordered by that structure. Advancing and accumulating weekly cycles float to the top, with the strongest setups first inside each group. Flip the direction filter and the whole ladder flips with it. Alignment is the thing to notice. Bullish setups are surfaced only when the weekly cycle is constructive, accumulating, re-accumulating, or already advancing, and the daily cycle isn't actively working against it. Bearish setups mirror the same idea on the way down. When both clocks agree, a setup is swimming with the tide instead of against it. A few examples make it concrete. Markup on both clocks is the fullest bullish alignment. The weekly trend and the daily rhythm agree. Accumulation on the weekly with the daily already in markup can mark an earlier stage of the same story, and markup on the weekly with the daily resting in reaccumulation is a trend catching its breath, still constructive. The bearish side mirrors it, markdown on both clocks, or a weekly in distribution with the daily already declining. The closer the 2 clocks agree, the more the cycle sits at a setup's back. And on any chart page, the market cycle strip gives the same read for a single stock. Its weekly phase, its daily phase, how long each has been in place, and when the last shift happened. Phases describe where a chart sits in its rhythm. They're algorithmic observations for education, not a signal to act. Context first, the decisions are always yours.